Thanks for tuning in to Countdown with me, Neeraj Shah and Navneet Saluja and Jubilant Foodworks. The numbers that were flashing on your screen before the break. We're still waiting the same store sales growth numbers because I think those are the ones that will be a needle mover too. But just looking at what the numbers have come out, just the fact that their EBITDA numbers are looking so healthy by itself should be aiding the stock. Revenues up 20% is not bad at all. Add to that, the phenomenal EBITDA margin expansion that they've done leads to the net profit moving up about 230%. That's about a 2.5x jump on the net profit compared to what they clocked in the corresponding quarter last year. I think this is the fourth quarter or third quarter of the new management being into place, new strategy being into place, losses reduced at Dunkin' Donuts, all of that playing a part. 1985 for Jubilant. We're still waiting for the same stores great numbers, but Navneet, you've tracked this in the past as well. Yeah. Fairly impressive set of numbers.
Yes, Neeraj, I think also important to highlight it's also on a low base, but definitely the numbers have been way above what the street was estimating. I think we've got a PAT figure of almost 66 crore versus the Bloomberg estimate was somewhere about 44 to 45 crore. So that's a huge beat. I'm sure those expectations also factored in that the base was low in the corresponding quarter because of demonetization. And as you rightly mentioned, Neeraj, post the new management have come, I think the only focus has been cost optimization, which has been clearly visible. We've never heard from Jubilant Foodworks shutting down stores which are loss-making, and that's been the trend at least in the last 3 quarters that I've been checking their press release. They've now started to shut down stores. I think there was a time when they used to give guidance of 100 to 120 stores. Now it's come down to almost 80 to 85 per year, new stores.
Wow. Okay. So that's a visible change in strategy. And as I said, we're waiting for the same store sales growth to come out. That is something that will be an important parameter to watch out for in the session. So do watch out for Jubilant Foodworks. It's a good quarter, better than estimates. And now we'll wait for the same store sales growth numbers to come out. While we wait for that, just a quick check on what the markets are doing. The Nifty 50, well, okay, it's the Nifty Bank though, which is leading the charge higher. 218 points for the Nifty Bank. So really good going for the banking space. And I would reckon some results that have come out are also aiding the sentiment. The private banks, they have not really, disappointed. Kotak Bank numbers were par for the course. The stock was not doing too badly. Even the others, like HDFC Bank, which came out with the numbers, the stock is not doing too badly. And about 1% higher for these stocks tends to augur well. Add to that the fact that ICICI Bank, Yes Bank, all are doing well. State Bank of India about 1% higher. So you have banks in a sweet spot doing rather well for itself. The Goldman Sachs upgrade or overweight on Adani Port is leading to that stock doing rather well. It's the best performing stock on the index. And the only pullback, if you will, is what's happening to the cement counters in the session today. Both Ultratech and Ambuja, the two stocks present in the Nifty currently, are down about a couple of percentage points apiece. So that basket is looking slightly weak. And at the broader end of the spectrum, I think gains for mid-cap IT for sure. Large-cap IT may not be doing well, but Cyient, Mastech, L&T Infotech, I think good solid gains for those stocks in the session today. And on the flip side, continued weakness. Those stocks will come up on your screen. Let's get Cyient, L&T Infotech, L&T Infotech is the one, Cyient and Mastech. Those are 3 names in the mid-cap IT space that are doing very well. And Tejas Networks, I thought, was the disappointment. Results slightly below estimates, and the stock is down about 6% in trade. What about the FNO setup, Navneet?
Well, Neeraj, I think the template doesn't change. There has been profit booking which is coming at higher levels, and that's been the case today as well. We did see the broader markets, gaining almost 0.5%, but they've also given up their gains. So that's been one pain point for the markets for sure. For Nifty, we're still holding up in green, so that's a positive sign. Let's not forget we're trading around the all-time high marks, and you've also got one crucial event now, Union Budget. So ahead of that, probably there wouldn't be any fresh big bets which the traders will be taking. They'll be only hedging their positions. So even if you look at the options data, the range is same, 10,500 to almost 11,000. But one positive takeaway is the put writing on the 10,800 and the 900 strike continues in today's trade. Over 10 lakh shares for both these strikes in respectively have been added so far. In terms of Bank Nifty, the maximum OI concentration until morning, it was between 27,000 to 26,500, but that range is actually widened now. So you can expect a range of 26,000 to about 27,000 because the 26,000 strike hike on the put side has seen a lot of OI concentration, especially in today's trade. So watch out for these levels. In terms of stock specific, Biocon, that's been the stock which is in focus after that development which came about post market hours. So the stock's been trading at fresh 52-week high also. It's up on very high volumes in cash. However, the futures have been trading at a discount of almost 3 to 4 rupees. Nevertheless, there have been OI build-up. So that's telling you there is fresh long build-up which is coming for Biocon. The other stock which I want to talk about is Jubilant Foodworks. We started the show with that. Well, the earnings are almost out. The futures have been seen a build-up. In fact, now the stock which was trading at a discount has just turned into premium. And there is a numbers fluctuating quite fast. 2 rupee premium from a discount of 1 to 2 rupees. So I think the street is still waiting for the same store sales growth number, but definitely the traders are taking a bet, because as you can see, the open interest is up almost 13%, and the stock is also trading around its 52-week high levels.
Well, we'll wait for those numbers for sure. For now, let's get into market voice, and an experienced one at that. Vibhav Kapoor, Group Chief Investment Officer at IL&FS, needs no introduction, joins us on the show. Vibhav, good having you. Thanks so much for joining in. The party continues, though I must say, Vibhav, the last 2 or 3 days, we've had a bit of a wrinkle on the banana peel, if I can use that term. Yesterday too, one of Yatin from our research desk put out this nugget that while we did hit all-time highs yesterday, there's significant erosion of market cap because the broader market strength seems to have dwindled a bit, at times gone away completely.
Yeah, so the mid-market, I think the mid-caps are taking a breather and are also correcting a bit. And I guess a lot of that is due to the fact that, they have moved up very, very sharply in the past few months. Second, I noticed that, domestic mutual funds, domestic money, which broadly supports the mid-cap stocks, has not been buying too much. So there's not been too many flows from them. In fact, it's been the other way around, and it's been the FIIs who've been putting a lot of money to work in the last few days. And probably that explains why the index stocks and the large cap stocks are behaving better than the mid cap stocks.
Well, Mr. Kapoor, what have you made of the earnings so far which have come out, especially from the banking space? We've seen some healthy set of numbers, especially from these private banks, be it Yes, Kotak and HDFC Bank, which came out with the numbers today.
Yeah, it's still early days as far as the earnings season is concerned, but whatever few results have come, I think have been largely in line with market expectations. And as you said, the private banks have done well. Particularly, I think the risk there is always, deterioration of asset quality, which has not materialized in this quarter so far, at least. As far as growth is concerned, I think all the private banks seem to have done very well, whether it was Yes Bank with 47% growth, or with HDFC Bank or Kotak Bank. All of them have grown their books very aggressively. So yes, all in all, so far results have been pretty okay. Of course, there have been a couple of disappointments, particularly something like Ultratech, where profits and even revenue growth were much lower than what the market was expecting.
What sort of earnings growth are you factoring in? Because we've seen the prices expand at least since 2017, but the earnings growth has still not come. If I look at the trajectory, at least in the last 3 years, would you be factoring in an earnings growth something between 15 to 20% in FY19?
Yes, I think FY19 we would be looking at something around 16%. That's our estimate. I think the economy is beginning to recover. There's no doubt about that, and therefore you would probably get good top line growth. One factor which could come in the way of a higher earnings growth than what we are projecting could be margins, because a lot of commodity prices have gone up a great deal. Oil prices are up. So that could have some impact on margins in a lot of manufacturing companies. It could put pressure on the growth rates.
Vibhav, the budget, almost everybody invariably believes that will be centered, or at least will have a significant outlay for rural / agri / both. What's your sense? Is it a given that that would happen and therefore is it discounted? And two, do measures like these help earnings within that coverage universe as well over a course of 12 to 24 odd months?
Yes, I do agree with that view. I think that given what happened in the Gujarat elections and the fact that we have elections next year, I think the government is going to give a lot of importance and recognition to the rural economy. And it is a fact also that the rural economy has lagged behind in the last 3-4 years, partly because outlays maybe were not as much, partly because prices of agricultural commodities were not raised as much, and therefore the terms of trade for the farmers went adverse. So I think that is something which the budget will definitely stress on, and the entire focus, largely entire focus, will be on that. Now these type of things do help. There is no doubt about that as far as companies and sectors which are focused on the rural economy are concerned, but it does take time. It's not that it happens overnight. The outlays from the government or whatever other schemes they formulate take their own time to seep through the economy, and therefore the reflection in earnings growth probably comes maybe 9 months to 12 months later.
Okay. The big buzz that I think that, well, the Times of India in a manner of speaking has kind of killed today is this whole talk of FDI on banks, in private banks, and I think there is no move as yet. Having said that, the results so far from the private banking space seem to be on the button, save a miss here, save a small miss there. By and large, you've seen private banks walk the talk on the numbers, Vibhav. An expensive lot, still gaining enough market share from the PSU space, valuation slightly expensive. If you had in your portfolio, I'm guessing the answer is keep them. But let's say if there is if there is fresh money coming in, Vibhav, would you put in fresh money to work in some of the large private sector banks?
Yes, I think we would do that. Having said everything, yes, the private sector banks are expensive, but as we've seen in the results in the last 2-3 days, they continue to grow very aggressively. Their asset quality remains much more pristine and better than what is in the public sector banks. As far as the FDI is concerned, I think it is really immaterial, and the market is just making too much out of it. It's just a sentiment issue, because except for HDFC Bank, I don't think there's any bank which has reached the limit or even close to the limit, and I don't think ultimately it matters too much whether FDI is 74 or 100%. And as far as the PSUs are concerned, I don't think any bank is even close to that 20%, so raising it to 49 is really not going to make all that much of a difference. So I think it's all sentiment, nothing else. And then, as far as market share is concerned, I think, yes, private sector banks will continue to expand their market share, given the fact that the PSU banks still have a lot of things to do. I mean, it's just not induction of capital. For example, now a lot of that capital might go away because of treasury losses, further NPAs. And I think what is required there is a real change in management culture, in the quality of, assessing credits, and so many other such things. Till that time happens, I think the private sector banks are going to have a great time.
Mr. Kapoor, what would you advise a retail investor who's already invested in the markets, and also to somebody who's looking for a fresh investment? Do you think it is the right time for somebody to enter the markets when you're almost at all-time high levels?
One has to be very careful now, because things can change. The macros, while everything looks good, the macros are actually deteriorating a little bit. Valuations are pretty steep, and therefore one needs to be very, very cautious in making new investments, and particularly in mid-cap and small-cap stocks. I think if you are investing in the very large cap names, the big cap index stocks, which are liquid also, you could still be okay, and you could get opportunities to either get out if you want to, or average low down the level. But getting into mid cap and small cap stocks at these levels can really can really be risky, and therefore needs to be done only after a very detailed due diligence of the investment you're making.
That's sound advice. Vibhav, thank you so much for taking the time out and joining us today and giving us your thoughts. And happy earnings to everybody. Thanks so much for being with us today. Well, it's happy earnings for Jubilant Foodworks for sure. Look at the same-store sales growth numbers, 17.8%. This is substantially higher. I don't know in terms of trend, Navneet. I don't remember the last time they did this.
Yeah, for sure they've recorded this number in the past, but you're right, in the last few quarters we've not seen this number. And just to tell you the estimate which our poll was throwing about a same-store sales growth of between 10 to 11%. So definitely at 17.8, almost 18%, this number looks very, very good. And in fact, we you know what, Neeraj, just before the earnings in the last 1 week or so, we've already seen brokerages turning bullish on it. For example, Morgan Stanley, they replaced Titan with Jubilant Foodworks as their best pick in the consumer space. And the numbers are actually living up to that, because if you look at the same-store sales growth at 18%, EBITDA growth of 17%, sorry, that's the, EBITDA growth of 17% of revenue, which is highest in the last 19 quarters, which they've highlighted in their press release. And they've also stated that reduction in Dunkin' losses continues for the company. So they've been sticking to the kind of guidance they had given when the new management have come. They're shutting down the old stores which were not making money for them. And that was the reason, remember, why the same-store sales growth numbers were also not looking good. But once again, it's coming on a low base of demonetization quarter. But nevertheless, it's a huge, huge beat when it comes to any number, if you look at it, bottom line or even the same-store sales growth number.
You bet. It's been a great quarter for Jubilant, irrespective of the low base numbers. Okay, PC Jewelers is a stock in focus. They've reported a growth of 70% in Q3 domestic retail EBITDA as per the press release. The numbers have been announced, and if I just look at what they've done on the revenue front as well, fairly upbeat quarter on the revenue from operations. The profit for the period higher than what they had done in the corresponding quarter last year as well. And of course, there is this push that could come in from the GST, a small measure that has happened wherein the GST rates on diamond and precious stones have been revised from 3% to 0.25%. Let's talk about all of that and more with Sanjeev Bhatia. He's CFO at PC Jewelers, joins us right now on the show. Mr. Bhatia, good having you. Thanks much for joining in. Let's just first get this GST bit out of the way. This rate revision, is this, how big an impact does it mean for companies such as yours?
So number one, I will request you to have a look at it from the macro viewpoint first. This action clearly shows that the government is very bullish on gems and jewelry industry. It considers it as a good tax generator. It considers it as a good employment generator, and it is doing all it can to encourage further growth and development in this sector.
Right.
So this is one point which I want to emphasize. If one looks at rather than from company's viewpoint, if one has a look at it from the macro viewpoint.
Yeah. What about the company, sir?
Yeah. Now coming to the company, obviously it will have a very good financial impact, because in the case of diamonds, the working capital cycle is quite long vis-a-vis the gold. So from procurement of raw material to the actual conversion from manufacturing to finish and actual conversion into cash, it generally takes between 8.5 to 9 months. So if initially 3% capital was blocked in the form of GST, now that suddenly gets reduced to 0.25%. So that is quite a substantial saving. How much would be the exact quantum will be too early to work out. But a quick back of the envelope would say, yes, if we are purchasing, say, about 1,600 crores or 1,700 crores worth of diamond every year, and even this thing, if we save for 2.75%, we save for 9 months, so it can work out to be something big.
Okay, fair call. But yeah, that's the number. I mean, people can do the math, 1,600, 1,700 crores and worth of diamonds, if they do indeed, and then the correction thereof, then the savings that they do. About 3%, more or less, the savings, because it's just a 0.25% rate now remaining. Okay, what about the quarter, Mr. Bhatia? Seems to be that you've had a good quarter. Is this the base effect coming into play? And or do you believe this momentum could stay as well? Because I would presume you are, in many ways, a fairly seasonal business as well.
If I talk about seasonal business, 40% in the first half, 60% in the second half.
Right.
More or less exactly. Now, coming on the base effect, yes, we are have the advantage of a lower base. There is no doubt about it. Last quarter was a demonetization quarter, and obviously the comparison does get influenced by that. But in any case, we have given at the beginning of year only, we gave a guidance of 30% growth in our domestic segment. And now this basically goes on to indicate that our guidance would be met both in the top line and as well as bottom line also. So rather than moving just from quarter to quarter comparison, I'm more interested on a year-to-year growth, and I'm happy that we would be able to meet our guidance given at the beginning of the year.
Which is what, Mr. Bhatia? I mean, what would your numbers look like? As I see it, you probably look on track for a PAT of over 600.
We had given a guidance of 30% growth. I'm talking specifically about domestic segment only.
Okay.
So about 30% growth in the domestic segment. So,
Right.
so leaving aside the quarter to quarter thing, so on a yearly basis, we should be able to comfortably achieve that.
Right. Mr. Bhatia, the domestic side of the business has definitely contributed to the Q3 earnings. But if I look at the export numbers, the top line has seen a marginal uptick, and that is on year-on-year basis I'm referring to. But if I look at the EBIT from the export, it's 76 versus 37. Could you explain these numbers to us?
So basically, in our exports, we have always meant our steady-state gross margins are between 6 to 8%. And we managed to remain more or less within these two boundaries only. Where the lower down profitability figure changes is more due to the forex movement during that quarter. So if you have exported at a certain level and when the revenues come in, then they are at a certain level. So where our export earnings change from quarter to quarter or shift or via this general movement is more of how much USD per rupee or how much, rupee per USD you are getting on the realization of your export proceeds in that quarter. So, I mean, and that is not in our hand. But our steady-state margins continue to remain between 6 to 8%.
And what are the margins from the domestic and the export side of the business? If you could give us a breakup there.
If I talk about the gross margins, so in the case of exports, as I said, it is between 6 to 8%.
Okay.
And in the case of domestic, depending on the percentage of diamond jewelry you manage to sell in that quarter, it is assuming that you maintain a ratio of 30% diamond and 70% gold, then our gross margin should be somewhere between 16 to 17% in case of domestic.
Okay, 16 to 18 from domestic, and you said 6 to 8 from exports. That's a huge gap.
Yeah, because exports is a B2B business.
Okay.
And but exports doesn't have any cost on rent, advertisement, investment, so that's the difference.
Fair enough. I want to know what's the debt on the books, because the finance cost has increased both on sequential basis as well as year-on-year basis.
Actually, this finance cost includes the whatever interest we pay on the gold metal loan, since that is the gold lease rates, etc. So that would as our operations go up, so that this thing would go up automatically if you procure more gold and if you procure and if you as you do on the GML basis. So the more of interest is due to that.
Right, Mr. Bhatia, we'll leave it at that note. Thanks a lot for joining us and taking us through your quarterly earnings, and all the best for the upcoming quarters. All right, that was the management of PC Jewellers. The numbers were pretty much healthy, and as he highlighted this time around, the contribution actually came from the domestic side of the business. But I guess, Neeraj, you were highlighting Jubilant Foodworks. Now the stock
5%.
is trading at days high with gains of 5%, and that's not surprising because the same-store sales growth number, as the street was waiting for, that's beat analyst expectation of between 10 to 11%. It's come in at almost 18%, and that's the reason you're seeing the stock spiking almost 5%. It's also crossed the mark of 2,000 in today's trade.
You know, and if Hormuz will pull up the average volume function, you will see the volumes are substantially high for Jubilant compared to the 10-day average. I would presume that's the case, but 2.83 million on the NSE alone. Let's just bring up the volume comparisons on Jubilant Foodworks there on your screen. Substantially higher. The blue line, the faint blue line, is the average volume over 20 days, and the volumes have suddenly spiked in Jubilant Foodworks and substantially higher than what the 20-day average is. That would normally be the case on a results day. It's just that the quantum of trading is just so high on Jubilant right now.
You know what, Neeraj? I think
seeing how many people take the delivery percentages as well, by the way.
All-time high levels of the stock were recorded in 2015, which was somewhere about 1937 or 1940. So today the stock's trading also at its all-time high levels after crossing that mark of 2,000 rupees.
It's just a robust quarter, and it's showing. By the way, a clutch of other consumption names seem to be doing well. Radico Khaitan is up 5%. Delta Corp is up about 4%. I'm classifying it as a pseudo-consumption play. And there is KRBL, which is up about 4% in trade. So good going for that one too. Another company that has done very well post its results is ICICI Prudential. Look at that one. It's up 3.5% after the numbers came out. Persistency ratio was much better than what was anticipated. And the 9-month numbers look robust or look decent, and which is why that bit of a spike in ICICI Prudential too in the session today. So good going for some of these names which have fundamental reasons like the results backing them. I just want to, before we hear out an emerging market voice, just want to mark all the companies that have come out with numbers today. ITC, HDFC Bank, Kotak Bank amongst the large caps, and then Tejas Networks amongst the mid-cap names which came out. So HDFC, all the large caps are flattish. I don't think Kotak, HDFC or ITC have really moved too dramatically. The numbers didn't cause that. Tejas Networks is down 6% post its numbers. Jubilant is up 6% post its numbers. This quarter is being marked by some serious movements across stocks, be it large caps, be it mid caps. Any kind of disappointment or surprise is met accordingly. Yesterday we had steep corrections in Hindustan Zinc, Adani Ports, Adani Enterprises, Adani Power, and a clutch of other names.
And I think NIIT Tech is yet to come with the numbers.
No, I think NIIT Tech...
it's almost at day's high, so I'm not quite sure, but the stock's definitely surged. Yeah, there you go. That's the intraday chart of NIIT Tech. The stock's trading with gains of as much as 4%. So do keep an eye on that counter as well. But as we speak, there are no major gains actually seen from markets. In fact,
the results are out, of course.
It's out. Okay.
Yeah,
I think then we'll be getting the management.
Tech. We should be getting the management any moment. But that should be interesting to watch out for as well. While we wait for the management to come in, just hear out a small voice. Jonathan Garner speaking on emerging markets, saying that they are very close to their peak. Hear out what he had to say.
Firstly, and most obviously, central banks are tightening, and that's begun in the US, but China has been engaged in ongoing tightening. You were just covering how good the China macro has been, but inflation is picking up there, particularly wage inflation. We've also got commodity prices on the rise, and that combination, particularly an oil price increase and increases in wages worldwide, that will eat into corporate profit margins, particularly out here in Asia, that's a big oil importer.
Right.
And then at the same time, we have a situation where valuations, and this is really the clincher, are exceptionally high, really other than in two sectors, financials and energy, but everywhere else we have valuations that are really 95th percentile or higher of the long run history.
Is this just, though, Jonathan, as you're describing this, just an emerging market scenario here? Are we talking also about U.S. markets as well, and in Japan and elsewhere?
Yeah, so there are very few places in the world now where we haven't exceeded our base case targets. So our base case target for the S&P is 2750. For topics, it's 1820, Hang Seng 31,500. So now what we're doing is moving from kind of our central scenario that we thought markets could get to into a more kind of bullish state of euphoria, particularly on that valuation overshoot, which is typical of an end of the cycle situation. Very large retail investor inflows. Emerging markets had $100 billion US of inflows last year, and that won't continue.
Jonathan, some say that if you track these movements in stocks, that is an indicator for the economies as a whole. We know back in 2000, what we found after with the dot-com crush is recession, particularly here in the U.S. and elsewhere. Are you seeing that is possibly going to be the case as well if we do in fact experience a crash on the magnitude of what we saw in 2000?
Well, the 2001 recession, I don't think it was really caused by the stock market declines of 2000, but certainly there are problems starting to appear, particularly in lower quality corporates in relation to the amount of leverage that they've taken on. So if you look, for example, at, say, the high yield part of the US credit market, we've already recommended going underweight that. And if you look out here in Asia, I think one thing that we really are interested in is the fact that the semiconductor tech hardware sector has stopped outperforming. So we made a big call 2 months ago to rotate into the final things that move in a bull market, which is energy, upstream energy, and financials. So the outperformance of upstream energy, and in fact the non-Asian parts of EM, like Brazil and Russia, that's ongoing now, that's a classic right at the end of the cycle phenomenon.
Well, we were talking about NIIT Technologies, which has jumped in trade after reporting a healthy set of numbers for the December quarter. What have been the key factors at play here? Joining us now is the Chief Financial Officer, Sudhir Singh, and Saloni Dhanuka from our research team. Saloni, over to you.
Thanks for that, Navneet. So, sir, talking about the quarter went by, can you discuss your order intake for the quarter and what has the order backlog now? And also, how is the split between US, Europe, Middle East, as well as the rest of the world?
So I think this quarter has been very good for us in terms of order intake. The numbers that we are reporting is $130 million US order intake through the quarter. Our order executable, to the other question that you asked, stands at $329 odd million again. So there's been a very sharp acceleration on order intake and on orders executable over the next year. From our perspective, we are actually seeing numbers come in across the three geos that we operate in, and more encouragingly from our point of view, across the three key verticals that we operate in. So the US has led the growth in terms of the order intake that's come in. Roughly about $82 odd million out of the $130 odd million that I told you around came from the US, and then the Europe and Asia, the rest of the world, have contributed equally for the remaining part.
And sir, what has the influence of seasonality been on this particular quarter?
You know, when we started the quarter, this quarter 3, as you know, traditionally tends to be a softer quarter for us and for the industry as a whole. But we've actually been very pleased with the numbers that we have turned in, despite the seasonal impact of furloughs and holidays that we see in quarter 3. So the 2.6% quarter-on-quarter revenue increase number that you're looking at has to be seen in the background of the softer quarter that quarter 3 normally is, and hence we are pleased with the numbers that we've seen.
And what's behind the margin movement? Are you looking to sustain these margins going ahead?
We feel very confident that at the current levels we will sustain the margins. The margin movement, as you've seen, has been very encouraging again. Margins have gone up, operating margins by about 96 basis points. So quarter on quarter, that's encouraging from our point of view. Moving forward, we expect marginal improvement, but the levels that we've come to, getting back to your question, we feel confident we will sustain them for sure.
And so what are you picking up from clients abroad in terms of spending and change in trends?
So let me take that. I think where we stand today, January of this year, we see the market outlook as being positive. As you know, we work across 3 different verticals. We work across insurance, we work across BFS, and we work across travel and transport. All the 3 verticals, the sense that we pick up right now is that the outlook, budgetary outlook, spend outlook is positive. So we actually see that doing well. In terms of trends, and this again is borne out by the numbers that you see from our firm, the spend around digital and technologies that we call emerging technologies beyond digital, the spend there continues to accelerate. The spend at the intersection of a few industry subsegments and some of these technologies again continues to accelerate. So that's how we see the world right now.
And a lot of your peers still indicate lack of visibility in the banking and financial segment. What about the demand sentiment in banking and financial space according to you, sir?
So as we see the world, banking and financial services for us, the segments that we operate in and we tend to be deep in is asset and wealth management. Out there, the outlook as we see it today from the key clients who we work with and the prospects that we're going after is positive. So we don't see any deterioration. We actually see positive momentum there, and that is exemplified in some ways by this quarter results around banking and financial services for us, which have grown 4.4% quarter on quarter.
All right, sir. It was a pleasure speaking to you. Thank you for speaking to Bloomberg Quint. So that was the management of NIIT Technologies, quite confident about maintaining their current level of margins. Back to you guys in the studio.
Thanks for that, Saloni. And just switching focus back to markets, we've seen some buying coming in the last 15 to 20 minutes as Nifty now trades around levels of 10,854, which is around the day's high mark of 10,858. And even the Bank Nifty is now up 1% above the level of 26,800. Even the broader markets have picked up some momentum. So you've got the mid-cap as well as the small-cap index of National Stock Exchange. Both have been trading in the green. As you can see, their off-day's low now, sitting with gains of 0.3%. Let's just quickly do a check of the market breadth. If you could just pull up the NSE stats and see, because I remember a while back it was clearly in favor of the declines because there was profit booking seen in the broader markets. It is still in favor of the declines, but clearly that gap is now narrowing.
Let's get in our technical experts on board then. Shrikant Chouhan, he's Senior Vice President of Technical Research at Kotak Securities, joins us on the show. Shrikant, great having you. Thanks so much for joining in. Good afternoon. Seems to be a good day yet again for the Nifty Bank after maybe some tremors that we felt yesterday, but that may have been due to the weekly expiry. How are you factoring in trades on all the key indices? And of course, couple it up with your stock-specific ideas for the afternoon.
Yeah, good afternoon, Neeraj. I think, see, the way Nifty is like consolidating, I think it is correcting on a regular basis, like one day is going up, another day is going down and all. So this clearly indicates that we are into excessive bullish run of the market. And because of this, whenever the market is like falling to its important support areas, it again bounces back. So yesterday also when the market was down, it was very close to its major support area of 10,770, and from there it recovered sharply. So now what is important is that whether it breaks yesterday's highest level or not. So 10,890 is the now next resistance level to watch out for. But in last, say like couple of hours of overall consolidation formation, we feel that the market has broken its upward range and it is going to cross this level of 10,890. So on the crossing of 10,890, we are expecting 10,940 on immediate basis and maybe 11,000 in next maybe 2-3 days of time. So it's a buy call at current level with a stop loss at 10,800. Even if you go through with the option chain, then in that you can see and you can notice that 10,900 put options, experts are writing those options. So which is very clearly indicating us that the markets are going to surpass the level of 10,900 in the near term. So net, the strategy should be to look for adding some long position. Even Bank Nifty is also strengthening on day-to-day basis. The final target for the Bank Nifty is close to 27,000. But if we take view of next few days, I'm going to say till budget, we may even see the levels of 27,500. So there also a lot of bullishness. So net, the setup is like of bullishness, and we should look for adding some long position. And if there is a positional view of any particular client, then he should keep a final stop loss at 10,700 for the target of 11,000 plus by budget. Stock specific, we feel that Raymond's and Manappuram, they are into strong uptrend, and they have corrected to their important support areas. Manappuram, which is currently trading at 120, is very close to its flag breakout formation, and we are expecting 127, 128 in the near term. We should look for adding the stock to our trading portfolio with a stop loss at 117 on the downside. We also like Raymond's, which is around 1080 levels. Here also we can keep a stop loss at 1050, and we can keep a target of 1120, 1150 on the higher side.
Okay, Shrikant, as you mentioned, well, the smart money definitely seems to be riding option, and that's been the case today as well, where a huge amount of put writing has been seen around the levels of 10,800 as well as the 10,900 strikes. Let's get some fundamental view going on the market. Anand Tandon, market expert, is joining us on the show now. Hi, Anand. Good afternoon to you, and thanks a lot for joining us today.
Thank you for having me.
Anand, the template for this market is just not changing because there is buying coming at every lower level. What would your advice be people who've invested into the markets right now?
Well, we seem to be towards the middle or end of a major bull run, and that is the time when the frenzy actually catches on the biggest steam. So if you're already invested, enjoy the ride and don't be in a hurry to get out. The only advice which I gave yesterday on your channel as well is that perhaps you may want to reshuffle towards larger cap, because that is where the likely returns are going to be better perhaps.
So you're suggesting for fresh investments, investors should stay away right now at these higher levels?
Well, it obviously depends on individual risk preferences, but clearly valuation is not the game that you are trying to play at this point. You can't justify being in the market at the current valuation. The only thing you can justify is that the momentum is in your favor. And, the expectation is that the market will become a little narrower as we go ahead. And which is why I'm suggesting that, you may want to move out of small and mid caps, which is where most of the money has been made so far, into somewhat more sedate larger cap stocks.
Anand, where should one find value then in a market like this? You're saying one should take money off the table if they've invested into broader markets, because there's a lot of talk going in the market that there is so much of froth in the broader markets. If you see these leveraged companies, the way they start correcting when there is slight bit of nervousness also in the market. If somebody wants to find a value in a market like this, when majority of the indices are trading around the record high levels, what should their approach be right now?
There is no value in the market. Let us be clear on that. We are not a value market at all by any stretch or by any parameter that you can find which is justifiable. However, what you are really betting on is whether there is continued growth or whether there is a possible surprise in growth. So, for example, if a Jubilant gives you a decent surprise, you can expect that the market will continue to rally. At 50 times, is it value? I would argue not really. So I think you are really betting on the fact that you'll find continued growth, at least in some of the sectors. From a slightly safer perspective, I would argue that because there is a global cyclical recovery going on everywhere, obviously the cyclicals are the place where you will be, and especially those which are affected by global parameters, and consequently metals, some of the public sector banks or corporate banks, I would say, which hope to have better recoveries and therefore lower NPA provisions, etc., are the ones which are likely to show the highest earnings growth, and one could be relatively safer investing in some of those.
By the way, some numbers on your screen, Navneet. IDFC Bank numbers are out, and the NPA numbers didn't look that healthy. Keep in mind though, IDFC Bank will now not be a play of what's happened in Q3. There could be some trading reactions thereof, but it's more a play now towards what will happen in the eventual merger and so on and so forth. That is not to say that bad numbers will not get punished. These numbers are not looking that great. Forget the profit, but the net NPA numbers are looking woefully bad. Yeah. So much higher than what the expectation, what the corresponding numbers were quarter on quarter, mind you. It's not YOY quarter on quarter basis, but both the gross and the net NPAs on a sequential basis look slightly higher. Provisions have come off a little bit. The stock maybe 1% lower. I don't quite know what the eventual reaction on this one would be, but yeah, for now, just about 1% lower in trade. Anand, have you picked up any other number or on IDFC Bank?
No, pretty much the same. I think the asset quality is what is disappointing the street right now.
Anand, any thoughts? IDFC Bank?
Well, I think you summed it up pretty aptly. You're really looking at the merger.
Oops. Okay, I think we just lost Anand, and then we'll get back to him in just moments from now. Shrikant, would you trade IDFC Bank at all? And by that extension, would you trade Capital First as well?
Dheeraj, there is some corporate action where Kotak Bank is involved, so we cannot comment on it. But yes, there is a good amount of activity in all NBFCs, especially in those NBFCs where there is some news flow, and That is why like we have chosen Manappuram, which is trading at 120. We also like MFSL as well as Muthoot Capital.
Okay, fair call. Appreciate that call, Shrikant. But I think we've got Anand Tandon back with us. Anand, sorry, we lost you, some technical glitch, but you were making this point about IDFC Bank.
Yes, I was saying that, you've already aptly summed it, that it's not so much just the performance now, but the fact that, after the merger, it will become a much stronger retail franchise and the corporate book will reduce to roughly about 55%. So therefore, the growth numbers, which are a bit disappointing for a while because of the lack of expansion of the capital book, will now perhaps correct. So, I think it will be still a while before all of that gets panned out, and therefore there may be some slightly better companies that you may be able to find at the current point of time. But if you can look beyond the merger, then I think it will be a company that will again become attractive.
Anand, other private banks too came out with the numbers today, Kotak as well as HDFC Bank, and yesterday you had Yes Bank. If you go by the trend by all these three private banks who've come out with the numbers, it's been in line. The asset quality is pretty much controlled now. Would you prefer the private banking route now vis-a-vis the PSU bank, which still is struggling?
Well, see, at a strategic level, that argument is a no-brainer, that you will be backing private sector versus public sector. The public sector banks are a no-go. Basically, they are trying to find the reason for their existence. Among the public sector banks, if you're looking at the corporate-facing larger banks, which have some reserves like Bank of Baroda and SBI, there is a case to be made that they perhaps have seen the worst behind them, and therefore you could be buying them. But on the retail side, there is absolutely no question that none of the public sector banks have any reason to exist, and either they should be sold off or merged with some of the other banks and got rid of. One is really searching for a logic as to why public sector banks should continue to exist, especially if they're supposed to perform like any other private bank and not just do a socialist function on behalf of the government. That is perhaps the only logic for them to continue to exist. And if that is not what the government is looking at them for, the best thing to do is to dispose them of.
Okay, I'm just revisiting Jubilant Foodworks. The counter is up about 5.5% to 6%. And as Anand also highlighted, well, clearly the valuations of this company are pretty expensive. If I just look at the FY18 price to earnings multiples is about 95 times. But some respite for the shareholders will be that you will see some sort of EPS growth coming back in the quarter. Anand, but I heard you talking about Jubilant Foodworks. I know the stock is expensive, but it's been a good turnaround story since the time the new management have taken control.
It does seem to. I still have to figure out exactly what has changed so dramatically that the footfalls have gone up. If that footfall growth can continue to sustain at this level, obviously, they have done a fabulous job of it. And that doesn't seem to have affected the margins at all, which is also surprising that one thought that there was perhaps a price rejig that has happened. I need to look at the numbers in a little more detail, but on the face of it, they seem to have done a very good job.
Well, Anand, Navneet here probably ordered the pizza at 3 a.m. because apparently pizzas from Jubilant Foodworks are available till 3 a.m. So maybe not a footfall, but a delivery from of the pizzas might be working.
Yeah, and
there.
I think also the GST rates were slashed to 5%. I was just reading the commentary from one of the management.
Yes.
They're saying it's going to be a very positive sign, in fact, in the coming quarters as well.
I think what will also probably happen is that you will have a slew of brokerages come out and give an upgrade on this stock, looking at the same-store sales numbers. So those brokerage calls will come out now over the weekend. On Monday, you will have, or you could possibly have, further reaction. You want to tap in the great Indian consumer, and if you want to tap in through this restaurant stroke food eatable perspective, I don't think there is a better play available or a more organized and a large-scale play available than Jubilant Foodworks. Specialty restaurants has been trying, but not quite reaching there. There is a small Kamath hotels out there which is going to chain of eateries, but nothing quite as widespread as a Jubilant Foodworks for sure, and maybe that is working.
That's right. I think my producer was telling me last 52-week low was somewhere about 820 or 850. I didn't get that number right. So the stock's more than doubled in last 1 year.
817 in May.
817 in May. There you go. So it's more than doubled actually if you look at the returns in the last 1 year. But I think kudos to the new management. You have to give them. They've come, turn around, change the strategy. Like I said, there were two things, whichever report you read regarding Jubilant Foodworks, they do say, we've never seen Jubilant Foodworks shutting down stores. Though they were struggling with the stores which were not making money, they've started to do that. The new management saw that Dunkin' Donuts is not working well everywhere. This quarter also, they've shut down 9 stores of Dunkin' Donuts.
Yeah, just one last thing though, and I don't know, and maybe Anand would want to comment here too. What has been the same-store sales growth of the related parties, of related companies? Your KFC or McDonald's, which is Hardcastle. Any idea of what the same-store sales growth numbers trends has been?
No, I'm not too sure, but I'm sure, Neeraj, it's not in double digits. I'm not sure whether it's going to be like 17, 18%, because let's say even the analysts who were factoring in this time around was only 11 to 12%, not 18 to 19% growth. So I'm not very sure about the other players, what their same-store sales growth number would be, but maybe, I don't know, for McDonald's, because their footfalls are quite high than Domino's.
But Anand, so that's the question, right? Even if we take into account this 17, 18% may be an aberration because of whatever factors, including comparables or otherwise, and I don't know if the same-store sales growth really gets impacted that way. But even if this is not a number that they can sustain, and the number is closer to a lower double digit, that's a really healthy same-store sales growth number.
Certainly, but if the number is the number it is because, for example, they have shut Dunkin' Donuts and that has made a difference. It just goes back to saying that look at the business model of the two products. One is a takeaway, which is on the phone. The other is where you come into the store and perhaps go and sit there and eat. Clearly, anything which is high asset base requiring is not going to make you money. And therefore, if you keep shutting them down, good for the near term, but to some extent, growth will get impacted. Currently, the QSR market is still very small. I think we are going to get another listing fairly soon of Barbecue Nation. That should kind of spice up the thing a bit, because clearly it is something which has been around for many years and seems to have done a fair job of growing the business quietly. So, once that comes in, I think you may find that the valuations become a little more moderate. Right now, it's also benefiting from being a rarity in the market.
Okay, I just want to take a technical view since the stock is trading around its all-time high level. Shrikant, what would you take a fresh bet at these levels, and also tell us if somebody had taken a long position here, is it the right time to book profits?
I think we are in the bull market, and this time this particular stock has broken its all-time highest level, and it is into all-time highest level now. After crossing this 1960, one thing is very clear, that it is heading for the next retracement extension, which is close to 2250. So I'm of the view that the stock is very clearly heading for 2250, and specifically in bullish markets, whenever the stock enters into new highs, a lot of buying comes and a lot of players starts chasing to it. So very clearly, if there is any long positions, then one can certainly hold on to it, because 2250 looks achievable in the near term. At the same time, a lot of people have sold this stock close to 1800 levels. So I'm of the view that now this particular stock is, the counter is very, very light, and this can go to even 2250 in next maybe 1 or 2 weeks of time.
It may not be overowned, even if it may not be underowned. Jubilant Foodworks. Let's wait and watch. Okay, moving on from the obvious to the not so obvious, and that's Swan Energy, which is arguably one of the mid-cap stocks that is moving around, or flying around, I might add. Nikki Mirchandani joins us with more details on this one. Nikki.
The stock has risen as much as 10.7% today, which is its record high that we're looking in for Swan Energy. If you look at the volumes, they remain pretty much moderate at 3 times its 30-day average volumes on NSE. The stock is moving on the back of development of company approving a fundraising plan worth 1,000 odd crore. Now, this is going to be raised through a QIP or private placement route, and this is according to a meeting that was conducted yesterday that the fundraising plan was approved. Now, remember, the company is sitting with a very low debt of around 195 crore, and this particular move will bring in more cash infusion in the company. The net debt to equity ratio stood at less than a 1 time at September 30, 2017. The company separately is also in the process of selling land in Goa, and this is expected to fetch company a good sum of around 115 odd crore. So we are looking some kind of good cash flow coming in this company. Could be for organic purpose or for any acquisition for that matter. We yet not not sure as to what the objective is for fundraising. To just give you a rundown of what the company is, it's the explorer and a procurer of natural gas or liquefied natural gas for Gujarat. It has a market capitalization of around 5,300 crore, and also do bear in mind the fact that the amount of 1,000 crore is a little less than the free float market capitalization of around 1,500 crore for this company.
Well, thanks a lot for that, Nikki. But if Swan Energy was the buzzing stock a while back, I think Growth Finance has overtaken that comfortably now, 8% higher, 648. The intraday of Growth Finance will show you that spike there. Look at what it has done this week. Growth Finance is on a roll, 25% for what is arguably the most expensive NBFC. 27% in this week. It's been a fabulous move for Growth Finance the last 4 or 5 sessions. Anand, somebody who holds this will not mind, but people who've been looking at stretch valuations for NBFCs would be scratching their head and wondering what's happening with Growth Finance.
I don't think you have to be looking at only NBFCs to be scratching your head. You know, that pretty much is true for the whole market. But as I said, right now, valuations is not what is driving this. And I don't think anybody, thankfully, is making that connection. If someone is, I'd like to see that math as well, because I have still to figure it out. But, you know, as I pointed out, you'll find that, you know, there is a move towards quality and frontline companies, and the income equality that you see in the rest of the country will also be seen now in the stock market, perhaps, where the richly valued will become even more richly valued before they all topple over and die.
You're in your element today, I say, Anand.
It's Friday.
That's a brilliant analogy that he's drawn, to be honest. Okay, I think I need to take a break because otherwise I'll be in a split of laughter for the next few minutes. Take a very quick break. On the other side, we also get in Sarvendra Srivastava. I'm told he's joining us on the show as well. So we'll get in thoughts from Sarvendra Srivastava on the other side. We'll get you Fab 4 stocks of the day, dealing room checks, and of course, what is it that both our experts, Shrikant and Sarvendra, are recommending as closing strategies? Stay tuned.
हमारे पड़ोसी मेहताज हॉलिडे के लिए अब्रॉड गए हैं। हम कब जाएंगे?
उसके लिए पैसे कहाँ से आएंगे?
लेकिन मिट्ठू इन्वेस्ट और उस पर इन शुक्ला जी की जिम्मेदारी छोड़ गए हमारे सर।
एफडीज में इन्वेस्ट करूं क्या?
अरे मिट्ठू जी, आज के जमाने में इन्फ्लेशन के बाद एफडी रिटर्न से हाथ में क्या बचता है? ईटीएफ में इन्वेस्ट कीजिए, जिससे लॉन्ग टर्म में मिलते हैं स्टॉक मार्केट जैसे हायर रिटर्न्स, यानी इन्फ्लेशन का कम असर।
लेकिन स्टॉक मार्केट तो ऊपर नीचे होता ही रहता है।
ईटीएफ लॉन्ग टर्म इन्वेस्टमेंट के लिए बिल्कुल उपयुक्त है। ये देखिए, हायर रिटर्न्स, इन्फ्लेशन बीटर एंड नो टैक्सेस। ईटीएफ में निवेश कीजिए और देखिए हाथ में कितना बचता है। भाभी जी, जरा कोकोनट ऑयल देना।
ETF investments are subject to market risks. Read all scheme-related documents carefully.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
What do we want from our country today? From the economy, from the politicians, the policymakers? Do we want a better deal?
Maybe more perks for smaller businesses or large businesses or any businesses.
Do we want it to be easier to create something new?
To find the job of our dreams, to create jobs for dreamers.
Do we want growth? Not just for the sake of growth, but for what it represents.
Not just numbers on a graph somewhere, but prosperity that we can see, touch, feel.
These things we want.
Can we expect them realistically?
It's time. Time for us to accept less and expect more.
Time for us to get on the path to confidence once again.
Time to go from making promises to keeping them.
From manufacturing slogans
to really making in India.
From a promising economy
to a delivering economy.
Can this budget mark a return to confidence?
Watch Budget 2018 with Bloomberg Quint.
Welcome back. You're still watching Countdown with us. Well, the markets are definitely going to end the week on a high note, but let's also find out what are the Fab 4 stocks of the day. And to take us through the same as usual, Yash Upadhyay joins us. Hi Yash, good afternoon.
Hi, good afternoon Navneet. So we kick things off with ICICI Prudential, and the stock had gained close to 6% today after coming out with their third quarter numbers earlier in the day. The value of their new businesses shot up by 82% on a 9-month basis and ended December 2017, coming in at about 767 crore rupees. The margins for their new business also shot up, coming in at almost 13.7% versus just 9.4% in that same period last year. The 13-month persistency ratio, which is a measure of the insurer's ability to hold on to its policyholders too, came in significantly higher at 87% versus just 83.5%. So good numbers overall for ICICI Prudential. Alembic Limited is gaining on the buzz that the company would be considering the proposal of a share buyback at its board meeting on January 23rd, and the stock is up about 7.5–8%. Biocon is up in trade today. It was up almost 8–8.5% today after the company said that it has entered into a global partnership with Novartis Arms Sandoz to develop, manufacture and commercialize biosimilars in immunology and oncology. And finally, we also have Healthcare Global, which is up about 8–8.5% today after the company said that it has received the RBI approval for the hike in FII limit to invest in the company from 24% to 100%. Back to you.
Okay, Yash, thanks a lot for bringing those Fab 4 stocks of the day. But let's get some more technical ideas going. And Sarvendra, Srivastava, independent market expert, is joining us on the show now. Hi, Sarvendra. What's the call on the markets and what are your top trading strategies right now?
Yeah, very good afternoon. No, I think with our house, I think we are still in the transition phase in the sense that the strategies that we had, positional strategies last week, probably they got stopped out. But still, as I said, not made up the mind that market can add many more points from here. So probably we are still looking at this leg as a small little whipsaw. And the reason for that is that into the new high of the Nifty and the Bank Nifty both, momentum has failed to deliver. And we have now back-to-back multiple divergences on weekly, monthly charts. So just because momentum is not confirming this move, I would still believe that this could be one likely whipsaw, and will like to kind of wait out for a session or so and then probably have a firm view on the positional side. But on the trade side, I think there's still for expiry, I would believe that we can't stay here wherever we are. So we'll actually move 200, 250 points either side. By expiry is my call. So I'll buy a long strangle on the Nifty where I will buy a 10,850 call and a 10,800 put. Collectively, when I put the graphics, it was both were around 48 rupees. But now 100 rupees is what you would have to pay for this. So one would be 60, one would be 40 now. But around 100 odd rupees, I will like to buy this triangle where the call is to buy 850 call and sell and buy the 10,800 put as well. So you're buying a call and a put both. And my sense is either the expiry would be 10,600 or close to 11,000. So in that sense, I think you would get a 1:2 risk reward on that strategy. Coming to stocks, I'll still believe that I will have a mixed trade now today. A buy on Concor on a trading side for a target of around 518, 1518, 1520 with a stop loss kept at 1448. And two sells. One is in the metals pack, which is Hindalco, clearly a weak stock. Look to short sell for a target of 238, keeping a stop loss at 26110. And a sell on TVS Motors as well, which is broken out of a small little bearish kind of a formation pattern. So for a target of 681 on TVS Motors on the downside with a stop loss at 731.10. And all my levels are spot levels.
Wow. Okay. Thanks for that, Sarvendra. By the way, Indiabulls housing is now up 4.5%. That's trading at the highest point of the day. And I didn't realize it through the week, but every day about a percent and a half. ICICI Bank for the week has notched up 11% gains. That's right. ICICI Bank is up 11% for this week. That's a big move for one of the largest corporate lenders. That's a phenomenal move that we've had out here. Anand, just before we let you go though, now that the government has officially communicated that there is no contemplation as of now of extending the FDI in banks, what's the call on the large private sector banks?
I don't see them changing their trajectory of growth anytime soon, especially the better managed ones like Kotak and HDFC Bank. So, for now, you can just ignore the valuations and continue to ride with the wave. Clearly, they will continue to gain market share, and their product basket is also going to, probably keep expanding and become more digital, which will allow them to continue to grow at a cheaper cost. So I think, there is absolutely no reason to look at any of those adversely. The corporate-facing ones, I think, will probably outperform this year because of the fact that they are coming from a lower base and will perhaps turn around. So for the near term, they may do well, but eventually it will probably go back to the consumer-facing ones.
Okay, Anand, we'll leave it at that note. Have a good weekend, and thanks a lot for joining us today.
Thank you.
All right, as we speak, Neeraj, I think before we close this week, we may just hit another record high levels. The all-time high on Nifty was 10,887. And we've already reached 10,884. And in fact, the Bank Nifty is also pretty close to its all-time high level. So we'll be watching out for that if we can hit another fresh high levels before this week closes. But a lot of stocks actually, Adani Ports, pull up that, the intraday chart. I think that too has gone up. Besides that, Ujjivan Financial, Adani Port is currently trading around its day's high level. Let's just also pull up Ujjivan Financial. There's some buying which has come in just in the second half of the session. As you can see, the stock's now trading almost at day's high around the mark of 409. Sarvendra, on the chart, any trade do you see for Ujjivan?
I think clearly this is one stock probably which has kind of shown more strength and incrementally is making higher tops, higher bottoms. So, but I would say that if someone already has a trade, can hold, but a fresh new trade probably will happen once you break past 420, 421. That's been a cluster for a couple of weeks where we have got many daily swing highs. So I would say a clean breakout past 421 is where you want to initiate a fresh long trade, and then probably look for another 10, 15, 20 odd points on the upside. Beyond that, I don't think that right now I can figure out a target. So around a breakout of 421 could lead you to around 440 max.
And as we speak, Nifty's hit another fresh record high levels. 10,890 has been hit in today's session. Let's see if we can touch once again that psychological mark now of 10,900 before we close this week. And Bank Nifty too right now trades around the fresh record high levels.
I just want to mark the European indices once and just see what the rest of the world is up to. 15 minutes of or 20 minutes of trade left. The rest of the world is not looking a bad picture. DAX is actually up about 1%. So the global markets are supportive. Remember, all through, we've been talking about how this is a global rally and not really just a local rally. It's good going, really, for almost all the key indices out there, too. Deepak Shenoy, founder and CEO of Capitalmind, joins us right now on the show. Deepak, good afternoon. Thanks for joining in. Is your PMS in place, Deepak? Are you already deploying cash? Because if you are, you should be a happy portfolio manager. The markets are celebrating.
Yes, Neeraj. In fact, we have our PMS started a month or so ago, and it's been good going. Although we are a little cautious, we haven't allocated all of the money, but obviously happy with how the markets have moved so far.
Skeptical or happy and happy?
Sorry, can you say that again?
I'm saying happy and skeptical or happy and happy?
Well, if people are making money, that's just happy. But skeptical on the market valuations overall, sometimes we don't know why we're making money, but as long as we're making it, it's fine.
Oh, that's a good answer, Deepak. We all don't know why people are making money, because clearly everyone's been waiting for that earnings growth. And whoever we've chatted with, Neeraj, they're sitting on cash levels of nearly, let's say, between 10 to 20% because they are skeptical. But every day we are hitting fresh high levels.
Yeah, at some point of time when everybody starts participating, is when maybe, as Anand was saying,
pre-budget rally now.
Well, it certainly seems to be the start of the month rally or a pre-budget rally, however you want to qualify it. But it's certainly seeming like a rally which is very, very strong and buoyant. and synchronize with the global markets, I would say. Deepak, now we'll have the earnings support, but it's not really about what's happening on the domestic front, is it? I mean, there are no cues that the market is waiting for. I mean, the market is not really waiting for the budget to say that there's no LTCG. The presumption is that there won't be, and if there is, then there could be a resultant reaction. So there are no per se any high assumptions or expectations really. Would you classify this completely in sync with what's happening across the world, especially US and Europe? And would the trigger be more global as opposed to local in nature for the markets to come off, with the presumption, of course, that nothing untoward happens in the budget?
Yeah, in fact, Neeraj, if you look at the broad market, a lot of the mid-cap correction has kind of set in. We've seen a lot of mid-caps kind of correct, kind of stay stagnant, while large caps are performing. And I think a large amount of it is driven by FII liquidity. So it's probably true that the worldwide kind of, bullishness is driving stuff into India. However, I am actually quite bullish about Europe and the US going forward in terms of earnings growth. I'm not very bullish about India about earnings growth in at least in the large caps. So I think we're in for a bit of a disappointment on the earnings front. The budget might throw up surprises, but I don't think it will be the LTCG surprise. It may be something else. I don't have a finger on what, but it's going to be the government's last budget. So obviously we're going to see something either spectacular or disappointing. But I think overall the budget might be a trigger for either reallocation or taking money out of the market. Today, global liquidity is definitely fueling large caps. The mid caps are stagnant, so a lot of the value pickers may be a little more disappointed.
Okay, let's wait and watch if something does turn around. Though I don't quite know what really that the budget could dish out, which could really disappoint the markets in a big way, aside of course, the fiscal slippage or long-term capital gains tax making a bit of a re-entry. Aside of that, I really don't know what else could be the case. Anyways, as we speak, Indiabulls Housing Finance is now up 5%, by the way. Bajaj Finance is up 2.5%, not bad going there. And State Bank of India, lo behold, is up about a couple of percentage points as well. These won't be the stocks that will these won't be the stocks that will have any kind of an F&O ban. But now it's 310, so I'm tempted to ask you, what's on your list today?
Well, there are three stocks, Neeraj, which might enter into the F&O ban for Monday's trading session. I'm going to start off with Just Dial, a counter which has been really volatile. Yesterday, it fell between 9 to 10%. Today, there was some recovery seen for this stock. Just Dial, yesterday's OI as a percentage of market-wide position limit was as much as 92.4. But the stock currently is seeing a bit of, it is under pressure. It's once again at day's low. So watch out for this one. For a stock to enter into the F&O ban, it has to cross or breach that level of 95%, and today's data does indicate that there has been fresh open interest additions seen for the futures as well as a couple of the option strike. The next one is Dewan Housing Finance, and that counter is active in today's session. As you can see, the intraday chart that is being displayed below that data, so that's up 3.5%. Watch out for this one, very, very close to entering the F&O ban. Reliance Capital is the other one. Yesterday's total open interest was 89 as a percentage of MWPL. Looks like it could just breach the 95% mark. So these three stocks may enter into the F&O ban, and just one, India Cements, that's likely to come out, because if you look at the open interest, it's already fallen to that level of 81% now. And for a stock to breach, to come out of the F&O ban, the total open interest has to fall below the 80%. Look at the stock in the second half, it started going up, and there has been recovery seen for India Cements. It's currently trading with gains of 1.5%. Not only that, I guess it's also trading at day's high.
Okay, so those are stocks that may come out of the ban or go into the F&O ban as well. Do watch out for some of those. Deepak, what's happening with Growth Finance? Any thoughts?
I haven't tracked recently, honestly. The whole, the NBFC housing market kind of got so overblown. I don't find valuations attractive. I haven't seen track grew in recent times. I don't even know if their results are out. So can't give you a clue, but I think anybody who's concentrating on the housing sector for affordable housing, which grew largely is, I think those continue to have a good financial growth ahead of them. My problem is that I'm paying this kind of valuation for these companies which I feel in the long term is not justified. So these companies should typically trade at PEs of 10 and 15. They're trading at significantly higher numbers. So they, at least they used to be. So I've kind of.
Okay. Which is a fair call. By the way, just look at what's happening to JM Financial in the session today, up about 5.5% good going there. And Cyient is now up 13% in trade, 657 for this one. Shrikant, Chouhan, Cyient, any thoughts?
I think Cyient was also like consolidating in a range for almost like close to 3-4 months. After that, today the stock has broken this range along with good volume, and now it is into new high. So again, the story is same like Jubilant Food. It is into all-time high after a long consolidation. It is currently at 655, 660. Based on the overall formation, I feel that the stock has changed its trading range. Now it is like heading for the levels of 850 in next maybe couple of months. So it will take time, so maybe 2-3 months, but it is heading for 850, that is sure. On the downside now, 620, 630 is going to act as a very good support. So if like really somebody want to take a positional call, then even at this price one can look for adding long position in Cyient at current levels.
Deepak, any thoughts? Cyient or any of the other mid-cap IT names? Some of the results have been pretty decent.
Very good. In fact, I wasn't so impressed by Cyient, but there's Mastech, which has done well, and there is also a few others like Mindtree. We thought had pretty stable results, and to be honest, mid-cap IT is surprising us from every possible angle. They are the companies that are not affected by demonetization, so they didn't have that down quarter to say in the last year, and still they're showing stellar results, with the rupee having appreciated in the year. So we would effectively be, quite positive, and I think we might end up adding a few in our portfolio in this quarter.
10,899, 10,900. That's 10,900 for the Nifty. Well, important psychological level, Navneet. I don't know about that.
What else do you call it? Because we are hitting new highs every day. It is a psychological level.
Yeah, but it's great going really. And interesting that every 100 points on the Nifty, which takes us closer to 11,000, is applauded. I remember a few brokerages mentioned 11,000 or thereabouts in the month of December as their calendar year 18 target. Guess what? We're doing that in the first 20 days of the month of January. So that's the power that we've had in this market. That's the kind of rally that we've had. And that's a big move there. 83 points, 10,900. Now it's not as magical a number as 11,000, but it takes us closer to that. Again, is that the end? No, maybe not. Is that the level that we will definitely reach? Maybe not. But for now, we take it a day at a time and we celebrate when the numbers move higher. The bulls should be happy.
For sure, they will be. And I guess we should also watch out for Bank Nifty. It was struggling to cross the 26,000 mark for months. I think it's taken only 4 to 5 trading sessions, the journey from 26,000 now to 27,000. It's just happened in the last, it's not happened yet. I'm just saying the gap is only 40-50 points. But I remember it was struggling a lot to touch the 26,000 mark, facing a lot of resistance. Bank Nifty is also trading at day's high. But watch out for these levels as we hit fresh highs. Once again, Nifty's hit the mark of 10,900 in today's trade. Can we just pull up the contributors list and see which were the stocks actually which have contributed? I'm sure financials are playing a big role here, but the contributors chart will show a very clear picture as to which are the stocks which have been contributing. It could be ICICI Bank, HDFC, so 2 big heavyweights. Reliance comes out with the numbers, SBI, so 3 out of the 4 top contributors are financials, Neeraj.
Yeah, that's big moves there. Anyway, it's 3:15, actually a couple of minutes over, but it's time to take a look at what dealing rooms are recommending in the session today. And Darshan and Yatin join in with their channel checks. Good afternoon, both of you. Darshan, let's start off with you first. What are you gathering from your sources?
Yeah, so overall the trend seems to be on the bullish side. Some of the stocks that have been spoken about. First of all, it's Dishman Pharma. A lot of, if you go through what's happening in our morning mail, who's meeting whom, we're indicating that the company is meeting a lot of investors today. So there is a lot of traction this time around. The numbers also are expected to be on the strong side. They have a lot of big pipeline of products that will be launched. So Dishman is something that's been spoken about. Again, Jubilant Foodworks, again, close to the 2100 mark in trade. Dealers expect that analyst upgrade should come in, the EPS should be upgraded. Pretty much this is one of the counters they are indicating could be the top pick as far as the FMCG consumer space is concerned. And finally, the last one is Indiabulls Housing Finance, above the 1300 mark, and it has been consolidating below the 1200 mark for a long time. Again, a move is seen, and today if you see, NBFCs have started their up move today. A strong third quarter is seen, and look at all the NBFCs in trade. So the banks did move, and today it seems like it's the turn of NBFCs to start making their move. So this is what they're talking about. But Yatin, what are you hearing?
Well, Darshan, a couple of stocks, and Havells, that is one stock which is quite weak, and on the basis of F&O trends, dealers are indicating that this could be one stock which can show some trading downside. So Havells is something wherein we are looking at some short positions which are getting built. Apart from that, watch out for ICICI Pru. That has delivered a good set of earnings, and on an overall basis, dealers are indicating domestic fund flows on the positive side. So dealers remains bullish as far as this stock is concerned. And finally, watch out for Bank of India, and in general, on an overall basis, PSU banking stocks. Dealers do indicate that there are certain FIIs which are buyers in PSU banking stocks, and that is probably reflective in the Bank Nifty as well. So dealers remain positive as far as the PSU banking lots are concerned.
Okay, thanks, Tari. I think I tell you, dealers should be positive on Growth Finance. That one is up 19% now. It's a big move there, and usually it's not a stock that will move without reason in such a big way. It's not just today's move, mind you. We've been talking about this, not just today's move. It's what Growth Finance has been doing for the last 1 week. This last week, Growth Finance has gained about 25%. Sorry, I stand corrected. 38% is the quantum of move that we've had in what is, as I repeat, the most expensive NBFC. But this is a big move. I think Hormus told me the biggest move that we've seen in the stock since April 2009. That's a long time coming. 705 and counting. I think the price to book must be northwards of 14-15 times, if I'm not wrong.
Well, the move
Maybe I'm wrong, but some absurd levels there.
We can definitely check that on Bloomberg, but I think the move has come because the numbers come out tomorrow. So maybe now the street could be factoring in that the numbers will be good, and Growth Finance is trading with gains of 18%. No, Neeraj, you're wrong. It's 21 times.
This will be trailing price to book?
It is trailing, yes, it is trailing.
So the 1 year forward or the current year price to book would be about 14 times. But that is, wow, that is seriously expensive. It's a quality franchise, yes, but this is seriously stretched valuations. But something must be up because of which Growth Finance is doing what it is doing.
I think there's some flash going on the screen. As per government sources, there's no proposal for FDI in banking sector which has been received yet. So that's some clarification going, but it is through some government sources right now. No confirmation there about. But remember, the entire banking space went up yesterday at the opening level on back of this news, but no major correction seen post this kind of flash.
Well, to be fair, I think the market was probably knowing about this since the morning, since Times of India came out with that note in their paper as well. But yeah, it's officially from government sources coming in. Any choice, last 8 minutes of trade left. Let's get in closing strategies from our experts. Shrikant, to you first, your top closing strategy.
See, I would like to go with two stocks, Bombay Dyeing and Indiabulls Real Estate. Indiabulls Real Estate is trading at 242, and here we feel that it is into long-term breakout. It is heading for minimum 270 and maximum 285. Today also, when the stock was down around 228, 230, the volumes were like negligible, and again the price movement is very sharp. So here we can create some long positions with the stop loss at 228 for the target of 270. The other stock which we like is Bombay Dyeing, and here also the stock has completed 50% of its entire rise from the bottom of almost 200. So today, the way the volume is there, and since last 3 days the volume percentage in delivery, we feel that the stock is heading upward and it is into strong end. We can keep a target of close to some 275 for next 1 or 2 days of time, and we can keep a stop loss close to 245.
Okay, what about you, Sarvendra? Your top call?
I have one STBT for Monday. I think Berger Paints, which is kind of now breaking its long-term averages and closing below that today, and breaking some trend line congestion supports as well. So my sense is that the stock could probably test 240 going forward for in Monday's session. And for that trade, I would keep a stop loss at 251.10 and levels are on spot.
Okay, I repeat, for people who have some questions for our guests, do send them on to our social media pages and we'll try and get those questions asked. I'm sure a lot of people have those questions. Considering that we are trading at live, I saw 3 experts are with us. Do shoot in your questions. 4, 5, 6 minutes of trade left. We'll probably try and answer 1 or 2 of those. By the way, as we speak, Science is up 14% only. And Jubilant Foodworks is up 9%, 8.5%, 9%. A lot of people are tuning in right now. That stock has gone up on good results. And Radico Khaitan is at 368. That's a big move too. Deepak, any thoughts here? The liquor space has caught fire, yes, but Radico Khaitan, the stock that's kind of coming out of some issues, some debt issues, they have deleveraged, so on and so forth. But it's a substantial rally in the last 3 months on this one. Has almost doubled now.
Yes, in fact, we're it's part of our momentum strategy, which is more price-based. But I think we've been waiting for results just to see how everything's panned out. I don't mind buying it at a higher price from a fundamental basis if everything's recovering. But at this point, I think it's momentum that's driving it. So, I would take more of a price call on it than a fundamental one.
Okay, let's just pull up Dewan Housing. Remember, we highlighted this counter for you that it could enter into the F&O ban for Monday's trade, and the counter is now trading with gains of as much as 4.2%, 615. Shrikant, on the charts, how does it look at these levels?
For Nifty, it is into again new high. It has broken its previous high.
Shrikant,
so while looking at the formation, it is heading for minimum 10,094.
Shrikant,
yes,
my question was in Dewan Housing.
Yeah, Navneet. Oh, sorry. I just skip that. Fine. For Dewan Housing, again, the formation is very similar to the Bajaj Finance and Bajaj Finserv. The stock has taken a lot of time close to this 598, 600 levels. Today again it is breaking out of that zone, but still it is in that rectangle formation. It has not broken the level of close to 630. So till the stock is below 630, it is going to remain under pressure. But yes, once the stock breaks the 630, then we can see the levels of maybe 665, 670 on the higher side. So I'm of the view that this stock is going to take some more time. And those who are have some positions, they can take some profit or they can liquidate their long positions close to 625, 630 levels.
Okay, so watch out for 625 or 630 on Dewan Housing on the upside. Well, it's time for us. The markets are about to close in 2 or 3 minutes, and let's head across to Neeraj to find out how exactly the closing today is panning out. And Neeraj goes without saying, it is going to close in high spirits.
Yeah, okay, yeah, right term to use, to be honest, Navneet, but yeah. 10,903, so we'll, even on post-closing or adjusted basis, we should be around the 10,900 mark, which is really good news. Sensex 2 ending well. The Nifty Bank has participated in a big way. This is starkly different from what the picture was looking like in the morning. So what starts off really does not end the same way. And the mid caps and the small caps too have participated with fair bit of gusto, I would have to say, about 1% apiece for each of the key mid-cap indices. What's moving within the large cap universe, though, it's all about banks. Adani Port hogs the list, yes, on the Sensex, and TCS does too, but then look at it. It's banks, ICICI Bank, Yes Bank, Kotak Bank, Axis Bank. HDFC Bank is up about 1% too. So banking all the way. State Bank of India has not participated, so that's a key thing. And the absence of the top loser on the Sensex is Infosys, which is down less than 1%. So lack of losers, banks participating, all leads to a very pretty picture. But I dare say, if you just look at the moves that have happened at the broader end of the spectrum, they dwarf the kind of gains that the large caps have. I mean, 5-10% seems to be the order of the day, Navneet.
That's right, Neeraj. We've seen good gains coming in the broader markets, which bounced back after the weakness that was seen in the last 2 sessions. Let me start off with Oriental Hotel. That counter was pretty strong right from the word go today. So that's going to be closing around the day's high level. So Oriental Hotel saw gains of between 13 to 14%. Well, earnings reaction all the way, and Jubilant Foodworks, stellar set of numbers, beat on all parameters, but it was the same store sales growth which excited the street the most vis-a-vis the expectation of 10 to 11%. They posted a number of 17.8%, closing at day's high. Not only that, it's going to be closing at all-time high levels, Jubilant Foodworks. Let's wait and watch what the brokerages have to say now about this. ICICI Prudential, another earnings reaction coming, a good set of numbers, and you can see the stock also reacted positively, up 4%. Biocon, on back of that news collaboration with one of the companies that counted open gap up, but sustained the gains throughout the session, and finally closing with gains of 5.5%. NIIT Tech, another company which came out with the numbers. We did speak to the management, and the stock, the street gave a thumbs up to the earnings, and the stock finally closed with days high with gains of 5%. From the mid-cap IT space, Scient, that's the counter that we've been talking about, and that closed with gains of nearly 14%. TT Limited was the other one from the broader markets, which registered gains of nearly 12%. Group Finance, remember the earnings come out tomorrow, and the stock has been pretty strong in the last 3 to 4 sessions. Okay, I think it's closed. I don't know if the circuit limit was breached there, but 19.5% pretty much looks like. Alembic Limited was also the other one, which was pretty active in today's session. On the losing side, Hindustan Zinc came out with its earnings yesterday. The stock fell post that. Some selling pressure was seen in today's trade as well. Closed at day's low with cuts of 3%. Tejas Network and Jubilant Industries were the other two counters which reacted negatively to their numbers. Dheeraj.
Well, but all in all, sea of green, I think the Nifty heat map will show you. I'm very interested in seeing what the turnover numbers look like in the session today, Navneet. Yesterday it was fairly high volumes as well. Let's see what's happened today. But a sea of green there. Banks ruling the roost. We've already established that. Now let's just get the turnover numbers on your screen. And the BSE cash and the NSE cash in particular, yesterday was 41,000 crores. 33, so not bad. The volumes are fairly decent. Above the average of 2017, volumes, yeah. Cash, BSE cash at par, NSE F&O, I think fairly decent in today's session too. And last but not the least, we've spoken about the contribution list, but let's just get the market breadth and the advanced decline ratio. This is the contributors, and we've established how ICICI Bank, HDFC Bank rule the roost. But the market breadth, and you see this move here, it just shows it's a fairly even Stevens. I'm actually a bit surprised.
The trend was changed almost 2 to 3 times today when it comes to the market breadth.
Yeah, it's just been a very choppy day in that sense, but I'm surprised with this advanced decline ratio market breadth. Anyways, this is for the week, of course, and ICICI Bank, HDFC, and when you have banks and financials participating in this way, it's very difficult to have a poor week. 2% gains, but just look at the list of gainers. It's been all about banks, negated a little bit by a couple of auto names at best, Hero MotoCorp and Tata Motors, so to say. But it's a week that will belong to the gainers, and particularly some of the result boys that have come out with some spectacular set of numbers. Anywhere from a Mindtree to a Deepak Nitrite to a Muthoot Capital hopefully even Group Finance tomorrow doesn't disappoint.
For sure not, the way the stocks rallied, otherwise it's going to crack, and how. Yeah, just want to add something to it. This week was the week where we saw a lot of buying coming from the FIs in the cash segment vis-a-vis the domestic institutions, and we've also seen some cash-based buying in these financials for the likes of HDFC Bank, ICICI Bank, and a couple of IT stocks as well, Infi, TCS, which have been trading around the 52-week high. So there's some cash-based, delivery-based buying, so to say, call it. So I think the buying which was seen from the FIs largely went into 2 sectors, which was financials and the IT space.
Wow. Interesting. Let's wait and watch what happens going ahead. Final thoughts from our experts. Deepak, Shenoy, before we thank you, let the party continue. The question mark only is, okay, so let me ask you that question. Navneet was referring to this point that a bunch of people that we're speaking to are saying that they're sitting marginally on cash or maybe even at a higher percentage. Would that be something that you've done too? I heard you mention that you're not fully invested, but are you in a higher proportion of cash than you have been ever in the last 12 odd months?
Yes, we have been, we've been suggesting to everybody that 60% allocation to equity is all we would do right now. And I'm fine with that because if you remember any of the old times, 2007 and even 2000, the kind of unexplained moves and the kind of euphoria in the markets start to peak around what we're seeing now. So I'm not unhappy about being, substantially in cash. It's okay because I know that at some point we will find great times to buy again, and we'll find more stories to buy. A lot of our stocks are just way above their buy prices, and we'll just wait till they come in, or if they show fantastic results, we'll still buy them at a higher price.
Okay, so those are the closing thoughts from Deepak, but let's also get some technical views from Sarvendra first. What would your approach be on Monday, Sarvendra?
See, I think if this breakout now holds probably, and momentum also kind of slightly picks up, because into this new high, both for the Nifty and the Bank Nifty, momentum has still not been able to confirm and not put a higher high in place. So that might take time, but if you start to stay clear of 10,800, 10,850 thereabouts, I think if we start to stay clear of that, then probably we'll add definitely 200, 300 points on the Nifty on the upside is possible. But as I said at the start of the show, that view is not kind of crystallized as of now. So I think Monday, Tuesday will kind of decide if you want to play that side of the story or not. Or else I think expiry could be really interesting to watch. Last 3 days could be a wild swing either side. And given a preference, I say that with the kind of excesses and the excessive reading that we carry, probably we are in for a disappointment. But I think the next 3 days into the next week, which are important to me, I think they would tell you the real story, and if something comes up there. So I would kind of have patience and wait and watch, and take a call on Monday's close.
Okay, so the next week is going to be interesting, as this is also the expiry week. Shrikant, if I can come to you, what would your approach be? Will it be index specific or stock specific?
I think on both the side, traders are making money, because all the smart traders, they are like playing on the on the large cap side. They are doing well, maximum large cap companies. At the same time, Bank Nifty, which is supporting to the market, is very, very positive for the market. If you go through with the option data, then close to 11,000 strike price, there is a huge amount of open interest which is standing on the call writing side. So in case if market breaks this level in the next, I'm going to say 1 or 2 days of time, then the big trouble will come for all those writers. And the open interest is close to some 60-65 lakhs. I'm of the view that we should look for adding long position if there is any correction in the market on Nifty as well as Bank Nifty. And for stock specific also, I think we can keep a mixing of mid cap as well as large cap.
Well, we did see that trend today. The call writers running for cover because there was unwinding seen for majority of the call strikes today. Well, on that note, Shrikant as well as Sarvendra, thanks a lot for joining us today and taking us through your views on the markets. Well, it's time for us to slip into a quick break, but don't go anywhere. We'll be back with more on the other side.
हमारे पड़ोसी मेहताज हॉलिडे के लिए अब्रॉड गए हैं। हम कब जाएंगे?
उसके लिए पैसे कहाँ से आएंगे?
लेकिन मिट्ठू, इन्वेस्ट और उस पर इन शुक्ला जी की जिम्मेदारी छोड़ गए हमारे सर।
एफडीज में इन्वेस्ट करूँ क्या?
अरे मिट्ठू जी, आज के जमाने में इन्फ्लेशन के बाद एफडी रिटर्न से हाथ में क्या बचता है? ईटीएफ में इन्वेस्ट कीजिए, जिससे लॉन्ग टर्म में मिलते हैं स्टॉक मार्केट जैसे हायर रिटर्न्स, यानी इन्फ्लेशन का कम असर।
लेकिन स्टॉक मार्केट तो ऊपर नीचे होता ही रहता है।
ईटीएफ लॉन्ग टर्म इन्वेस्टमेंट के लिए बिल्कुल उपयुक्त है। ये देखिए, हायर रिटर्न्स, इन्फ्लेशन बीटर एंड नो टैक्सेस। ईटीएफ में निवेश कीजिए और देखिए हाथ में कितना बचता है। भाभी जी, जरा कोकोनट ऑयल देना।
ETF investments are subject to market risks. Read all scheme-related documents carefully.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
What do we want from our country today? From the economy, from the politicians, the policymakers?
Do we want a better deal?
Maybe more perks for smaller businesses or large businesses or any businesses.
Do we want it to be easier to create something new?
To find the job of our dreams. To create jobs for dreamers.
Do we want growth? Not just for the sake of growth, but for what it represents.
Not just numbers on a graph somewhere, but prosperity that we can see, touch, feel.
These things we want.
Can we expect them? Realistically.
It's time. Time for us to accept less and expect more.
Time for us to get on the path to confidence once again.
Time to go from making promises to keeping them.
From manufacturing slogans
to really making it in India.
From a promising economy
to a delivering economy.
Can this budget mark a return to confidence?
Watch Budget 2018 with Bloomberg Quint.
Welcome back. You're still watching Countdown with us. Well, it's a day of positive trade even for the European markets as well. Let's head across to Sandra Kiloff, who joins us from the London studio with the complete lowdown on the markets there. Hi, Sandra.
Hi, so we're seeing European stocks follow Asian equities higher today. Optimism about global growth really beginning to feed through into the markets. The Stock 600 climbing about 0.7%, reaching its highest level in more than 2 years today. Germany's DAX, meanwhile, rallying 0.9%, while the FTSE 100 has climbed just 0.1% here in London. That's the first advance in a week, though. Now, earnings in part to blame for that slightly weaker performance at the London index when we compare it to its European peers. For instance, British retailer Carpetright did drop more than 40% at the open, currently down about 4 to 3% after issuing a profit warning. It reported a sharp deterioration in UK trade, saying its sales fell 3.6% in the 11 weeks to January 13th. Carpetright now expecting profits for the full year to be between £2 and £6 million, below expectations that were as high as £15.6 million for the year. If we take a look at currencies this morning, the euro has gained 0.3% to $1.2279 against the dollar, while the British pound is close to a 2-year high, climbing 0.1% to $1.3913 against the greenback. And this comes despite UK retail sales data this morning showing that retail sales fell the most in 18 months in December. That's as stores experienced their customary post-Black Friday lull in the Christmas month. Now, the volume of goods sold in shops and online fell 1.5% from November. It was the biggest drop since June 2016. And finally, if we take a quick look at fixed income, Germany's 10-year yield has gained 1 basis point to 0.58%, while 10-year gilt yields have climbed less than 1 basis point to 1.338%. That's the highest level in a week. Back to you.
Thanks a lot for that, Sandra. Let's cut across to the Kotak Mahindra Bank management.
MCLR goes up. So the MCLR जो बड़ा है, जैसे TD है, CDs है, सब में 50 basis point practically increase हुई है. So MCLR accordingly based on the formula it goes up.
We saw about 20% growth in the corporate book. Where exactly is the demand coming from at this point? Most banks that have reported earnings so far are seeing an improvement in this particular pocket. So where is the
No, they're seeing an improvement in growth, yeah, but not necessarily margins. Right? So growth is there. Basically, I think on the corporate side, a lot of it is market share grab really. Yeah, so that's where your growth
Coming
typically.
from the public sector banks, when you say it's
It's not necessarily public sector banks. Maybe probably 5 banks had lent to that company. Now only 3 banks are lending. So that 5 gets split across
Is it
3.
mostly working capital, or you see other forms?
No, there's no working capital. Bulk of these really tend to be term loans, really, yes. So there would be.
Sectors are you
It's
seeing?
all over, really. It's all over. On the corporate side, it is all over. So it's not necessarily incremental financing which is really being asked for or called for. It still is sort of refinancing of existing debt, really. As interest rates came down, people always, corporates always find it easier to just refinance and rework their lending.
Look, since you don't have much asset quality woes in comparison to many.
Much meaning we don't have any.
Since
There is no question of much.
Quality woes in comparison to peers, would you be looking to increase your exposure to the corporate segment, especially when there is a revival in demand now, or would you still stay very focused on the retail?
No, you see, historically we've just followed a balanced approach. Yeah, and if you look at our portfolio, we are sort of reasonably spread between wholesale, which is corporate, SME, and retail, and I think that makes sense. So it's important for you to keep that discipline of distribution rather than say, oh, this looks good today, but I don't know how it will be tomorrow, so let me go out and do this today. So from a risk philosophy point of view, I think we basically cover equally all 3 segments. No specific love or hate or otherwise for this one. Yeah.
If I look at slippages during this quarter, of course, slippages will be there all along. So we've also taken some recognition of things which are not necessarily the 90-day rule. So if I look at my total slippages this quarter, including those, would be less than 300 crores, which would therefore mean less than 2 bips on the overall advances. So that's broadly the slippages, which is substantially lower than what we saw even in the preceding quarter.
Well, we do report SMA 2, so I'm saying that's a simple way you can look at it. It still is among the lowest in the banking industry.
We are the first one and the only bank.
Who reports SMA 2?
So my SMA 2 right now is what, 0.19%. My restructured standard is like 4 bips. So we're pretty low on all of those counts. The second list, we would have 6 accounts, not large exposures. Again, we have kind of ended up providing almost 2/3 of what we have exposures on. About 300 to 400 crores, somewhere around that. Sorry? Yes.
How much stress tests you have bought in the quarter?
Well, it's difficult to put a number, but it's not a very large amount, really.
So the bank has been very vocal about how you want to monetize the stress test opportunity out there. But so far, whether it's a tie-up with
Okay, so that's earnings, and while we are still talking of earnings, big boy Reliance Industries is going to report its numbers today, and growth likely to be driven by the petchem segment. But what's most interesting is how will Reliance Jio contribute to the financials? Sumit's been putting together the street expectations. Sumit, what are you watching?
So I'll start off with the headline numbers first. On a standalone basis for Reliance Industries, compared to last quarter, the revenue is expected to be 11% higher to 76,000 crore rupees, while EBITDA is expected to be marginally down to around 12,876 crore rupees. Now, margins will also contract by around 200 basis points to 16.9%, but net profit will be 1% higher to around 8,345 crore rupees. Now, this will be the 7th consecutive quarter for Reliance Industries on a standalone basis to see a net profit growth. Now, the key number, that is gross refining margin, is expected to come in at $11.5 per barrel in this quarter, in the third quarter, which is a bit off when you compare it with the last quarter, which had around a GRM of around $12 per barrel. Now, this is because the Singapore gross refining margin, that is the Asian benchmark, also came off to around $7.2 per barrel in this quarter versus $8.3 per barrel in the last quarter. So if you see on a net-on-net basis, the premium to Singapore GRM is actually rising and has bounced back to $4.3 per barrel versus $3.7 per barrel in the last quarter. Now, if you see segment-wise, the petchem business is expected to outperform in this quarter also and will offset the subdued refining segment. The petchem business is expected to outperform because of volume expansion and because of the ethane imports that the company had seen in this quarter. Now, volume expansion will be because in this quarter it will see the full benefits of the paraxylene plant that it had set up. On Reliance Jio front, Reliance Jio is expected to post a net profit for the first time, which will also add to the company's consolidated net profit, that is Reliance Industries' consolidated net profit. And Jio is expected to come out with a net profit because of the sharp cut in the interconnect usage charges. Now, interconnect usage charges were cut by around 57% from 1st October 2017. Now, if you see in the second quarter, the company had paid an interconnect usage charges of around 2,100 crore rupees. So even if we assume that everything else remains same, a 57% cost saving there could definitely bring Reliance Jio into profit.
All right, Swami, thanks a lot for bringing those details for us. We'll be keenly watching out for the numbers of Reliance Industries which come out today in the evening. But markets are also keenly watching everything from fiscal deficit to a possible return of long-term capital gains tax in the upcoming union budget. But everything is business as usual. Indian markets will continue to rally in sync with global markets. And that's the word from market veterans Hiren Ved and Saurabh Mukherjee. Even though Indian market valuations are expensive, they do not expect that to spoil the party on Dalal Street. Listen in to a slice of that conversation.
If it's business as usual, then the baton would move to what's happening. We are in some sort of a synchronized global rally, right? So it'll depend on what's happening, globally, and obviously within that context, what's happening to earnings in India. So we are seeing reasonably good earnings coming through in some of the early names that we've seen so far. But the market already anticipated some of that, well in advance. So I think if the global bull market rally continues, then we will play in sync with that. I mean, I don't think we will do anything different. And maybe then the budget turns out to be one more event where where they say it climbs another wall of worry and reaches a new high, and then whenever it has to eventually correct, it will. So yeah, I mean, I think people will forget it after maybe a week or so, or even shorter than that nowadays.
Shorter than nowadays, maybe the next day. Saurabh, if I'm not wrong, and the last interaction that we had, you were not too constructive on the markets. I think the markets as of now are trading above what was your fair valuation for calendar year 18, if I'm not wrong. Now, what's the stance now? Again, assuming that the budget turns out to be a non-event, and no bad news is probably good news.
I think Jeremy Grantham of GMO said it very nicely on 3rd January. He says we're in a global melt-up.
Yeah.
So I don't think people like me and my views on valuation matter anymore.
That's okay. I like it.
So valuations clearly have nothing to do with reality. If you look either Nifty, Sensex, you're at 23, 24 times. You're 2 standard deviations above your 10-year average. There is no rational basis on which you can justify, not just our market, S&P 500 I think is in similar territory, highest S&P 500, most expensive since 1929, our market most expensive since I think 2000. So across the world, as Hiren is saying, as Mr. Grantham has said, we're in a melt-up, we're in a synchronized global recovery. So yes, I think the market's overvalued, but that doesn't really matter. I think what matters is confidence, which there's plenty of. What also matters is there a recovery happening in our country? And the answer in that is unquestionably yes. We are especially on discretionary consumption, especially on sectors like metals, on construction. You can clearly see the recovery panning out. You can see corporate confidence, consumer confidence improving. So that will drive even more animal spirits in the stock market. Because as it is, you're bullish, you made money in the last 2 years. Around you see earnings growth improving, GDP growth improving. You don't really kill yourself trying to calculate the PE multiple and comparing to the 10-year average. You just say, let's party.
Yeah, well, Grantham also said that for a US investor, while the melt-up is on, if you think in US is expensive, go and buy the emerging markets, right? In the same piece,
there you go.
He was very bullish on the emerging market.
I don't think I've seen my foreign clients so happy in last 10 years. Because globally they are making money, I think it's the first sort of signs of, first big set of smiles I've seen amongst our foreign clients since the Lehman tragedy a decade ago. It's a remarkable time. It's the first sign of real frenzy and complete bullishness taking hold of both global and Indian equity markets.
Well, the GST Council reduced rates on a slew of items in their meeting yesterday. The rate revision has benefited a range of companies from L&T to Wonderla Holidays. We managed to speak to both of them earlier today. Hear out their views.
It is a positive step in many ways, more than one.
Number one, the capex of metros will definitely come down. 18 to 12 is a big step. Bulk of the metros, as you know, are financed by the government itself through various loans that they take from multilateral agencies. Hyderabad is a one-off project which is financed by Larsen & Toubro, but most of the other projects coming out are government-aided projects. So the capex costs of metros do come down. Second is that there will be a significant reduction in working capital because a company like us moves resources from one state to the other. And in this kind of process, there is the fact that you pay the tax and then you wait for the credit later on, and therefore a significant blockage of money. Working capital coming down is a singularly a big financial movement.
Amusement park sector has been adversely affected because of GST. It was at 28%, which is much higher than what we were paying in the pre-GST era. Now they have, I think, recognized that, and they've brought it down to 18, which is a very welcome move for us. Obviously, our prices will come down by 10%, which is good, and so the customer will benefit from this, and we are hoping that will help us, bump up our footfalls.
Okay, and as we get closer to the 2018 budget, income tax is the money you pay to the government for a variety of things, building of roads, public health, government subsidies, etc. But how much you pay depends on the income tax slab you come under. Simply put, the higher the income, more the tax. Watch the BQ explainer.
What are income tax slabs? How much tax am I paying to the government? How do I save tax? If your answer to these questions is this, then pay attention for the next 3 minutes to get to this. Income tax is the money that you pay to the government for a variety of things: building of roads, public health, government subsidies, etc., etc. How much you pay depends on the income tax slab you fall under. Simply put, the higher the income, more the tax. If you earn 2.5 lakh rupees in a year, you pay 0%. Between 2.5 to 5 lakh rupees, you pay 5%. 5 to 10 lakh rupees gets taxed at 20%, and annual income more than 10 lakhs attracts a 30% tax. But before these rates can apply to you, you get the benefit of deductions, which are basically incentives of sorts. The incentives broadly fall in these 5 buckets. 1.5 lakh rupees that can be parked in mutual fund tax schemes, public provident fund, employee provident fund, post office schemes, children's tuition fees, life insurance premium, annuity plans, stamp duty charges for purchase of new house, and repayment of the principal amount of the home loan. Another 60,000 rupees if you take health insurance. You get a deduction of 25,000 rupees for buying health insurance for yourself, your spouse, and dependent children. This amount becomes 30,000 rupees if the person insured is more than 60 years old. You can buy health insurance for your parents too and claim an additional deduction of 25,000 and 30,000 if they are more than 60 years old. Paying interest on home loan is the third incentive. For self-occupied house, the limit is 2 lakhs, and if the property for which you've taken the loan is on rent, then the entire interest amount is tax exempt. The fourth benefit bucket is an education loan, and there the entire interest paid is deductible for a maximum period of 8 years. And finally, if you don't own a house and you don't get house rent allowance from your employer, you get the benefit of deduction. The amount is lower of these two. Rent paid in excess of 10% of total income, subject to a maximum of 5,000 rupees per month, or 25% of the total income. There are other categories of deductions too: contributions to charitable bodies, political parties, treatment of critical diseases, etc. But we'll keep it simple for now. So here's how these deductions are applied. Let's say your annual salary is 11 lakh rupees, and assuming you make use of all these 5 buckets to their maximum limit, the math will look something like this. Now let's go back to our tax slabs to check the rate. Since you fall in the 5 to 10 lakh bracket, you will be taxed at 20%.
With that, it's a wrap on this leg of Countdown from Navneet and me. Thanks so much for watching.